So the Fed's obviously watching this, and the worst thing that they can do is they can cut interest rates here preemptively on the idea that the labor market has the illusion of being weak, but it isn't. And what that's going to do is essentially line them up for a policy mistake where maybe we see a persistent trend in inflation or in reinflation, where inflation starts accelerating up. And the Fed's at a point where remember, the first time they cut, they're going to move forward guidance as soon as that happens, right? As soon as they start cutting and they kind of, unless they really preface it with the idea that they're going to pause right after it, there's going to be a forward guidance implication to that. So within the scope of what's going on here, the Fed likely cuts based off what the market's saying, but I would deem it a policy mistake, which likely leads me to believe that 100% probability of it happening based on specifically the last NFP print, which rose odds from I think it was 40 or 50% to 100. So literally odds doubled from that NFP print, which got shaken off by the market. It makes me think that just maybe the market's either mispriced or the Fed will actually enact a policy mistake. Now, to bring this back to our positioning, right? There's a SOFR trade that can be taken here with, I would think, asymmetrical payoff, given if the Fed holds or if they cut.